Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, December 12th, 2019. I wanted to get an early session video out. It's about 10:41 Eastern Time, so I'm starting the video, and I want to share my thoughts on two things, primarily, the energy sector and the stock market. As you guys know, lately I've been highlighting the energy sector as one of my favorite. To me, it's by far, without even a close second, the most bullish setup that I see, and now it's actionable. We have a breakout in XES and as well as XLE. So we went from bullish setups to actionable trade ideas. But again, there's a few things I want to share. I'm going to get this chart out to you. I'll share price targets, potential targets at levels, and I may add this as an official trade as early as today, possibly before you even listen to this video. So let me jump into the charts. Let me start with the broad markets because that could have an impact. There are two variables as to whether or not the energy stocks will continue to rally. Those are both the stock market, being that the energy sector is one of the 11 sectors within the S&P 500. It's only about now less than a 5% weighting. It used to constitute a much larger weighting, but in recent years tech has taken over and energy is much lower due to the decline. These are probably a secular bear market. Stocks like the big energy stocks like ExxonMobil, when you take a step back, most people might not realize that most of the big oil stocks peaked back in 2014, and they've been in a just an unmistakable bear market since, at the very least a cyclical bear market. So that's but yet that is still a sector in the S&P 500, and again, in my opinion, has the most bullish looking potential right now, bullish setup, some of the best risk reward profiles out there. So we're going to get to that in a second, but I'm going to start out with the stock market, and let me loop over to the post that I made this morning. Okay, so I'm going to back up, talk about the stock market, because there are two things that will most likely determine whether or not the energy stocks, rally and turn out to be, good swing trades from this point going forward, or even trend trades, potential bottoming plays, or whether or not the bullish setups that are in place now, even the breakouts that are occurring today, will fail to materialize, or we'll get some false breakouts. And those two things are number one, the stock market, and that may or may not have a direct impact, because the reason it may is that being a sector of the S&P 500, let's just say that the market corrects. Let's say it's 5-10% or more. When the market corrects, you have outflows. Money is coming out of the market, causing prices to go down. When you or I or any institutions sell their funds, or index funds, that's what most people are chock full of nowadays, S&P 500 index funds. Everything, all the stocks and sectors within the S&P 500 get sold proportionally. They have to be sold in order to have the cash. The positions have to be liquidated to meet the redemptions. It's that simple. So now here we are, the market's at new, at or near all-time highs, when you look at the stock market, and yet the energy sector is well off that. In fact, they're off multi-year lows right now on XLE. So my point is that the stock market, energy sector could rally just as it fell as the stock market was climbing. It is possible to see it rally, but again, it will certainly be a headwind to see a correction, especially if it's a pretty heavy selling in the S&P 500. So I want to just throw that out to you, and therefore that's why I'm going to talk a little bit about what I'm seeing in the stock market now and how it may impact, or potentially foil what appears to be bullish setup here. And then the other one, which has a more direct impact. When I said the market could possibly correct and energy stocks could go up, what is very unlikely is to see oil drop 5-10% or more. Oil, have a correction and the energy stocks rally. So a lot like you guys know, I always talk about GDX. I love trading the gold mining stocks, silver mining stocks, but as I say, you are all but guaranteed to have your gold mining long stock trades fail or have a hard time playing out if gold is correcting and not going up as well. So, and I've done this before. I've overlaid charts of gold, energy stocks. You can do the same here. You can take, any chart of long-term chart of crude oil, overlay it with the with the energy sector, and you'll see there's an unmistakable correlation. So, in other words, crude oil has a much higher impact on whether or not these energy stocks breakouts will play out. So USO, I've covered this recently. Here's the latest benefit of the doubt trend line right here. We're pushing up against there. And I've done extensive analysis. I don't want to get too deep into this right now in this video, but here it is. Crude oil's been in this multi-month trading range since back last May, bouncing around the top of the bottom of that range, and hasn't yet made a convincing or really a breakout at all, at least on USO. There's a failed breakout right there, and that's what happens when a breakout fails. So, point number one, I'm seeing breakouts in XES, XLE today, but they're not confirmed with a convincing breakout in oil. Oil is up. USO, the oil tracking ETN's up 0.65% as I'm doing this video. Certainly looks poised to break out and may break out. But again, I'm going to loop back and start with the broad markets today, and then I'll get over to crude oil and those, and give you some price targets on some of those energy sector ETFs. All right, so back above, let's go back here, right here to this morning's post. Okay, so I had this, what I thought was, and still do, just nice, clean wedge patterns that really appeared to break down, and I believe they would have if we didn't get the tweet from Trump today. Trump had tweeted out at 9:35 Eastern time, 5 minutes after the market opened, right as these 60-minute wedges were starting to crack, but we never did get the sell signals because we didn't get any 60-minute closes. We just moved intra-period, snapped right back above. So from a technical perspective, here, let me pull up the current chart. That was this morning. Let me just show you the two charts that I posted there. That was NQ, this was ES, and these nice little wedges. And I said sell signals to come onto there. And then what happened is, here, I posted this at 9:35. Trump tweeted out, very close to a big deal with China. They want it, and so do we. The headline that I see from the Journal so far says, U.S. negotiators offer to cancel new China tariffs. I didn't read the whole article, but it looks to me it's an offer. Nothing's definitive yet, and we all know there's been plenty of tweets from the president saying a deal is imminent and big deal is coming, and they didn't materialize. Look, sooner or later one will, probably, maybe this one will. All I'm trying to say is I'm treating this move with skepticism, but I'm also taking it on face value because number one, we didn't have a breakdown. I'm going to go to the charts. Well, I'll just show you these I posted in the comments section. That was ES, NQ. You can see the big lift right there, and then QQQ. This is pre-market session trades. We're dropping. We're poised. We're right about to crack below those trend lines, or just starting to, but we just hadn't done so on a 60-minute close yet, and then boom, the ramp up afterwards. This is a 1-minute chart you're looking at here of QQQ, again with pre-market trades, and that's 5 minutes after the open right there. So that's what happened today. And as I said, and somebody even said in this tweet, are you manipulating the stock market? Look, whether he is or isn't is moot, because we can say he is, and that's why, but we didn't have a sell signal. That sell signal came very close but was not triggered. And I'll tell you what, if he was manipulating, if I was his advisor on how to manipulate the market, how to burn shorts and create a short squeeze, I would have said, wait, let the NQ ES drop a little bit farther. They were just starting to crack, but they hadn't printed a 60-minute close. That's what I would do. And you can see we hit this horizontal support, and look at that. That 60-minute candle never closed down below there, and we fired right back up. So I personally, if I was trying to pump the markets, I would have let it come down to here. All the shorts would have piled in, longs would have started jumping out, stops would have been hit, and then you reverse it and you get a failed breakout, and that's very bullish. You get the shorts have to get, they get squeezed out, they start to cover. But again, there was no sell signals triggered, at least not by the way I trade. I like to see either a solid move down. If it's not a 60-minute close, at least an impulsive breakdown that looks like you're almost going to guarantee to get a 60-minute close, or you wait for the actual 60-minute close down below there, and we didn't get that. So take it on face value. All we have today so far is a successful defense of support. We've been walking up this trend line, hit it again, bounced up. That's NQ, And ES, let me show you that. That's what ES looks like. Let me zoom back in there. If I can grab it here, there it is. So same story. ES hit that 31.39 support I had. Printed the green candle close way back above the line, so we didn't have anything. We didn't have any sell signals at all today, and we're still wedging higher right now. So now, here's the thing. It's a fool me once, shame on you, fool me twice, shame on me kind of thing. There's been plenty of these tweets over the last year of imminent progress, a big deal in the works, and it didn't materialize. Look, the market keeps stair-stepping higher, but if it turns out that the next headline is China denies or, says, no, we're not taking that deal, there are people that say China has really no reason to work a deal right now with, what is that, two impeachment proceedings going forward on Trump right now. Look, I don't want to get into politics, and I ask you, I implore you on both the comment section below and the trading room, limit any discussions to politics to how it might affect the market. Please don't share your opinion, your like or dislike of the president or any other politician or any other party. Please don't do that. It's fine if you want to discuss how it might impact the market. But please don't be critical of anybody, because the last thing we want, there's plenty of forums out there in the blogosphere, Yahoo or wherever else you want to go and have political conversations, but it only leads to arguments and infighting, and again, that's also a violation of the terms of policy. So I'm asking you respectfully to hold your tongue on your opinions unless it directly relates to the analysis or something that you think that, if this happens, this bill passes, then the market may drop for that reason. That's okay. All right, let's move off. So here's what happened, and here's what didn't happen. We had a successful defensive support so far. The divergences are still very much intact. As I often say, divergences are not a buy signal. Let me repeat that again, because I say this all the time. Divergences, whether they're bullish or bearish, are not buy signals. Just like overbought and oversold conditions are not buy and sell signals. They are an indication that a trend change is likely, but these are what I call potential divergences, because these are momentum indicators. This is the PPO down here in the RSI, and the momentum right now, see how they're pointed up, is up. And if they continue to go up, what happens is they take out these previous highs right here, and then you no longer have divergence. So what would have to happen is we'd have to reverse soon. You can see that this is that uptrend line on, what are we on now, ES? We are back testing, and there it is. That trend line comes all the way here off the lows back in mid-October. It's a trend line that I've had on this chart for a while, and we back tested it right here once, and we had a rejection there. And this is a second back test. We had a momentum fueled overshoot. This was a vertical rally, very common, almost to be expected that you will overshoot a resistance level even if you're going to get a reaction. So far that's the case. Let's see where we go from here. We reverse soon, then the indicators turn down. We could get some confirmed divergence, but again, a sell signal will still come, no different from the analysis I posted before this pop, still pending a sell signal on a break below an impulsive break and or 60-minute close. And now that we've had another reaction off 31.39, to be safe, you probably want to see that level go. So maybe we break down back test, and that would be the level on ES. NQ, and again, remember, I'm doing this analysis for twofold, to just kind of update on the market. There's NQ, same thing. We need to break that trend line, and ideally also take out these lows, these two candlestick lows from today, about 83, 82 right there. Otherwise, the trend is up, and you can see NQ, just like ES, is also back testing that trend line right there, the blue trend line right here, which actually I could extend all the way back to that line there. There it is. So divergent high, breakdown, bear flag, back test number one, back test number two. This is our pattern right here. Got a little wedge right there. They're certainly buying this market today, make no mistake about it. Even though that's a bearish rising wedge pattern, doesn't mean it must break down, and until and unless it does, you don't have a sell signal, but something I'll watch. And again, now we're going to roll into the energy stocks. Should this break down, a measured target, just a measured target is the width of the widest part of the wedge to where it breaks down. That would probably bring us down here to about 82.78, 82.80, and maybe if we exceed that target down here, that 8200 level, which is still a big level. A lot to do before we even get there, so let's not get too far ahead. If and when we get a sell signal, I'll start to update and hone in on those targets and give you some comparable targets on SPY and QQQ. All right, now to the energy stocks. We're going to start out with, I already looked at crude briefly on via USO, but the big one to watch, CL, crude futures. If you recall in some of my recent analysis, let me see if I can grab a chart, if I have any charts that I saved. Okay, this would have been the last one I posted on the site. This is December 6th, so just about 6 days ago there. And at the time, I was bullish and still am on crude, cautiously bullish right now. CL was backtesting, broke above 58.67, pretty big level, and I said it's backtesting that level now, following the breakout, thereby offering another objective long entry with a stop somewhat below. Got to give it a little room. That was again 6 days ago. Let's look at it now. Since then, there was a breakout and it's held. Crude's whippy. It's a volatile commodity, a lot like natural gas. A couple brief dips below, but you can see it's been holding above that, right on that level. Again, a few brief minor dips below, nothing to really clear you out on a stop, unless you're running too tight of a stop. Now we need to take out this previous high. Bullish the fact that it's broken out, and bullish, make no mistake about it, and I pointed this out, we're in an uptrend. These are the dual uptrend lines that I have down below, parallel trend lines that will come into play with break of that lowermost trend line being bearish. If you look at the bigger picture, this is a trend right here, a price channel. Crude is in an uptrend and has been a near-term uptrend. Not a longer-term uptrend, but a near-term uptrend since right here, what is that, the late September, early October lows right there. So the trend is bullish. It's broken out there, and so far so good unless we come back down here impulsively. You can see that I have potential divergence lines, just like the indexes right now. Potential. If crude turns down here soon, even if it goes on to make a marginal new high, it has to equal that high or make a marginally new high. And as long as these divergences are intact, there is a chance this breakout could fail. So again, I'm doing this video because I'm seeing XCS breaking out. I'm seeing XOP breaking out today. There's some charts that are screamingly bullish to me in the energy sector, and some of those stocks are starting to move. So the quick takeaway from this, and this is what I told somebody in the trading room, and asked Randy, is XCS a go, breaking out? Yeah, I think so. And the thing is, look, I've just spent a lot of time telling you how this breakout could fail if the breakout in oil fails. If this pop that Trump gave the markets today gets faded soon, again, whether China is not receptive to the latest overture from from Washington or not. We'll see what happens there. If it fails, the thing about it is you can go long with a stop in place. Now, if crude comes in backtest or XCS, you have a trend line here to backtest. So I think an objective stop, it's pretty wide, but you have support right around there. You could certainly use a tighter stop. And now if the breakout sticks, let's look at this thing glass half full. The market successfully held support today, right, on those trend lines and rallied impulsively off there. Crude broke out, as I pointed out, 6 days ago, and it's still above that level. It's still in an uptrend. So let's take things on face value. I have my concerns and a little bit skeptical of it, but the way around that is, look, maybe the breakout sticks. Maybe these charts play out, the technicals play out, and I'm looking at this as a bottoming play, not a short-term tactical trade. For silver members and gold members, the front page, homepage posts that I make are typically geared towards swing traders and investors with time frames of measuring at least several weeks to several months or even years on those trade ideas. Lately, I have not been seeing a lot of that. The trade ideas, put out a lot of unofficial trade ideas. The official trade ideas have been very light due to market conditions. Low volume, divergences, very low volatility. Swing traders, traders make money in volatility, especially swing traders, and we're not seeing that. So, and I'm not seeing a lot of nice setups in the S&P 500 sectors and stocks that are heavily correlated. So a lot of the trade setups I've been putting out there are niche stocks and sectors, little biotech stocks, commodities, things like that have very little, if anything, to do with the broad market. But this one, again, has potential. And so you take it, some breakouts fail, some stick, and right now I would be looking at this as more of a bottoming play. And it is, again, highly contingent on the stock market continuing to rally into year end and beyond. The reason why is, as I said in the beginning of the video, the stock market can drop and oil, crude energy stocks could go up, even though they're a component of the S&P 500. But the reason why they probably won't, and this is, I've done this for you several times in the past. Go back to USO. Let's make no mistakes about it. Crude oil and the stock market are highly correlated. So we look at USO, edit chart properties, go to comparison of the S&P 500 right here, and now you can see it. If there's any doubt that crude oil and the stock market are correlated, don't look at the differential in price, just look at when one goes up, one goes down, look at where the turns were, the inflection points. There is a virtually 100% very tight positive correlation between energy, crude oil, and the stock market, at least in especially in recent years. Why is that? Well, it's plain and simple. If the stock market's doing well, that is because the majority of people out there assume that the economy is going to grow going forward. Otherwise, the stock market would not be going up. So when the market's rallying, everyone's assuming the economy is strong and will continue to grow, and therefore they're assuming that the demand for oil will increase. Because when the economy is strong, people are running more cars, trucks, planes, trains, automobiles, all that stuff, and demand for oil is high. Likewise, when the economy goes down, especially into recession, the demand for oil falls sharply. And so take my fundamental reasons or not, but the charts don't lie, so there it is. So there's the comparison, and then it all goes back to what I was saying early on. If this tweet, the pump that we got today in the market fails, if we get those sell signals in the market and we start to correct, oil goes down, and then because these breakouts are just occurring, they look great, but I've seen some of the best looking breakouts sometimes fail. This breakout could fail on XCS right here. The levels that are big, we took out the trend line the other day, but not impulsively. Today is a big impulsive green candle. Follow up to the breakout above the trend line, which helps to confirm it, plus above that 750-ish level where it's 764 now. So one idea too is to put a relatively tight stop and let it ride. Again, pretty constructive chart, but that doesn't mean that we can't go down and continue to wedge lower and then break out at another point. Or remember, the energy stocks, make no mistake about it, are in a bear market. This goes back, here we are on XES. The XES peaked back here in 2014, just like big oil. XES is down 87%. That is a vicious, relentless bear market. So at best right now, well I won't say at best a bottom, the bear market is over and a new rally to come. That's also going to entail several more years of economic growth to say that we're about to embark on a new bull market. So maybe we're looking for a bear market rally, and I'll take it. I don't care what label you put on it. These energy stocks, when they run, even in bear market rallies, they can easily do 30, 40, 50%. I've traded these for many years, so I don't care what label's attached to it. I love trading bear market rallies. So that's that. I just wanted to share those thoughts that, and also to add to that, since I just showed you clearly that energy is in a bear market, the other point to that is that bullish chart patterns in a bearish trend tend to have a higher rate of failing on breakouts, just like all the short trades. When was the last time you saw pretty much gave up on official short trades on QQQ and SPY a while ago when this trend proved to be very resilient? Why? Because bearish chart patterns in a bullish trend tend to have a much higher rate of failure. You get the sell signals, they break down, just as they start to look good, boom, the next leg up comes. So that's why I'm spending all this time, instead of just posting a chart saying XES broke out, I'm giving you my thoughts. And in other words, I would not go with an overweighted position. If you like it, take a position. If you think it's an attractive trade, my targets right here, first target zone 815 to 832. I may revise that. I may add this as an official trade. I may even do it today. I'll probably wait till the day is over to see. Just see if these breakouts today stick in the equity markets and in oil or in the energy stocks. Like I said, oil's not. Crude needs a little more work to really kind of firm up the breakout scenario. XES right there, next target, and maybe up to 1044. XOP, Still above trend in this bullish falling wedge. This is the trend line we need to take out, as well as that 2274 level. There was a previous reaction high here, but I see some reactions around there. Not a hard line. Really, the trend line should do the trick. And again, bullish divergences continue to build. We had the divergence back here. We got a big rally there. It was a tradable rally. And I think finally, if we get a break of this trend line, it could be, we could have, let's just say, I can tell you right now, if the breakout sticks, oil continues to rally from here, and the stock market holds up through the end of the month into January, I think this is a very doable target right here, about 20 swing target, 2787. That's about a 25% return at minimum. If we break out, unless the breakout fails, I expect to move up here to about 2461. That's about 11% gain on XOP. And XOP, you do have the options for drip or gush. Gush is the 3-time long. But again, if you take that, you have 300% leverage. Take your position size down. All right, let me see if there's anything else I wanted to cover, and then I want to get this video out to you guys. No, I think that's it. I'll spend some time. Like I said, I'm loving what I'm seeing on a lot of these stocks, or liking what I'm seeing, I should say. I already shared my, my concerns. But then again, that's, I tend to be a skeptic on certain things, and you need to be. Just watch those levels. But just beautiful, beautiful, beautiful price action on Schlumberger breakout. Just all green consecutive impulsive candles moving up. There's some targets on Schlumberger. All I'm doing is going through some of the largest components of XES. BKR, Baker Hughes, breakout today on a big green candle. Today is too early. I'll have to check the volume to see if it's tracking above average right now. But there's a breakout right there on Baker Hughes. I might add a benefit of the doubt trend line here. I'll have to play around with this chart, but that's the trend line I had. Let's just put one up here and breakout. So the point is, the individual stocks are confirming. In fact, a lot of the individual stocks have already broken out, as you can see, and are running. This one's at the first target now, $24 would be my first target on Halliburton. And again, some of these charts I have to update, but I just wanted to kind of give you, let you know that a lot of the individual stocks also confirm the bullish setups and or breakouts that I'm seeing in the sector. So I'm going to end it here, and most likely I will hold off on adding it as an official trade. But as I said, you want to take a partial position, a full position, or you want to sit back and wait. That's up to you. And I will, I'll just follow up from here. We'll see what the market does today, tomorrow, into this week, as well as crude oil and the energy stocks. All right, I'm going to get it out to you now. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.